maybe the fiat system, that kind of rule or that measurement, that system that you've lived in your whole life, maybe it doesn't actually make that much sense. I have a suspicion that we might get a bit more lift off before they start spending this cycle. We'll see.
Checkmate is the on-chain analyst for glassnode with an engineering background who believes Bitcoin is a solution to the way people think. When you understand Bitcoin and proof of work, it gives you proof of work, which leads to a consciousness shift. We will dive into the data shortly, what the whales are doing, what the on-chain metrics show. In your words, Checkmate, Bitcoin on-chain data is an infinite playground of everything from curiosities to insane trading edge. First off the bat, Checkmate, I know you hold a position in gold. My question is, why?
That's a really, really good question. So first of all, thanks for having me on, mate. So the gold it's an interesting take. So if Bitcoin didn't exist, I'd probably be a gold bug, just because it makes sense, right? You look at the fiat debasement, you see all the macro economy, you're like, all right, so the paper's going to go down, the gold's probably going to be that anchor. So it makes sense at that level. One of my best trades ever is I was driving down the freeway back in 2020. This is kind of when it would have been like August or something. Gold is the same price that it's been for my entire life, like $1,800 or whatever it is. And I'm listening to one of Michael Saylor's early, like when he's first just starting to talk about things, right? And I'm just driving down the freeway, and I'm just listening to him talk about his strategy and what he's kind of seeing. And I've been studying it for longer than Michael has, but he just hit a few points. I'm like, I reckon I should just sell my gold. Bitcoin is going to run faster than it anyway. I may as well do, and I did. And I sold I think Bitcoin was like 10 grand, and it, to this day works out to be a good trade. Now I still do own. I've actually been layering back into gold. Why do I do this? Well, I don't want to in any circumstance, right? Because I truly struggle to hold fiat because it is just dog shit. Once you kind of work it out that it's just going to zero, it's just hard to hold a meaningful sum of your net worth in paper. So I'm like, okay, what do I want to own? Like, I could own stocks, but they kind of go up and down. It's like they're a bit too volatile. It's like what I want is a cash that I can sell if I need to, that isn't dollars, that I can, if something goes pear-shaped, I got, a couple of months worth of life. And essentially, I would be really pissed if I had to sell forced my Bitcoin at a cheap price if it had any kind of volatile event. Gold, I don't mind selling plus or minus 20%, right? And it's just not going to move that much. So to me, gold is basically my cash reserve that is not fiat. That's kind of the way I look at it. There's also extra bonuses, like you can do margin if it's in an ETF, right? Would I hold it in physical? No, because then you got to drive down to bloody Sydney and actually take it in and get it revalued. It's just a shit show. So Bitcoin is orders of magnitude better, but I hold the gold so I don't have to ever force sell my Bitcoin should anything hit the fan.
So mostly allocated to Bitcoin, hold a little bit of gold as dirty fiat, and absolutely zero dirty fiat as much as you can help.
Pretty much, mate, and that's pretty much been the case for a long time.
No, I think that's really smart there. So another question I have, and this is from the audience, is does price follow the narrative, or does the narrative follow the price? And do you see that, does Glassnode see that different on different time scales?
Oh, that's a great question. And the answer is that they both feed off each other, right? Price feeds narratives and narratives feed price. And this is actually what I love about the on-chain data side is that what is on-chain data? It's just the Bitcoin ledger. It's what happened, right? It's just fact. So the concept is, what actually puts in, let's go to like an extreme. Why does Bitcoin find a bottom at the end of a bear market? Well, it's because a bunch of people who were going to sell, and a bunch of people come in with more money, and they literally put the bottom in. They say, no, I'll take all the coins you have at 15,000. You can see that happen on chain. You can see the people who bought the top capitulate at the bottom. You can see those people rush in and actually take that floor and establish the floor. So what establishes the narrative that the bottom is in? Well, the bottom getting put in by people who take decisions and make actions. So the answer is that price and narrative and the facts on the ground, they're all in this orbit around each other. And at the end of the day, you're just trying to work out how you describe it. And I think a lot of people get stuck on trying to say which one leads, which one follows. The truth is, you got to find what works for you. For me, when I actually look at the mechanics of the blockchain itself, and I see supply moving around, quite often, I basically only use on-chain data, and price is cool. Sometimes I've got a triangle on my chart, but I don't really do technical. In fact, I do no technical analysis. I just look at the on-chain data, and it seems to line up with price because they're all telling you the same thing, just with different levels of resolution. And it just happens to be what works for me. So I just focus on what kind of gives me the edge.
Awesome. And what are some of the things that you are starting to see on-chain at the moment? And is it like a live feed, like we had the Fed meeting this morning? Are you getting information from that on chain straight away, or there's a little bit of a lag? And then I guess take it back even further. What are some of the biggest highlights maybe over the last 6 to 12 months?
Yeah, no, that's a great question. So what I'll do here is I might start with kind of what 2023 has been, because there's kind of two phases, and then talk more about what happened today and looking forward. So if we take most of 2023 up until about October, across all the on-chain signals, it was a very quiet market. I mean, this is the amazing stat. On a closing basis, Bitcoin hasn't even pulled back 20% this year. It's like in terms of bear market recoveries, it is the most impressive. We've given back the least amount of gains in this whole time. So there has been support the whole way up, and it is quite remarkable. Now, the other thing to note there is that when you look at a lot of the flows, it was very, the best way I can describe it, it was an uncertain recovery. People weren't sure. I mean, the narrative was that Bitcoin was dead for 10 years when FTX happened, right? That was what everyone was talking about. And there's a lot of that PTSD. And for the most part, there was no new money. It was only the hodlers who survived the bear were still around up until around October. Now, October was a very interesting shift because when we broke above 30,000, anyone who's kind of listening, if you go to your price chart, just zoom out on a big picture view. If you were to take the 2020 cycle onwards, try and draw like a line that you would say is dead center, like horizontally. Where's the middle of the market? It's about 30,000. Now, there's a couple of price models as well that we developed recently, which are pretty much the average cost basis for everyone in the market, not including lost coins and miners, like active investors. And it too is about 30,000. As we broke above 30,000, that was the first influx of new money. So not only did the kind of mechanics of the chain shift from it's just the hodlers, very quiet, very uncertain, a bit of volatility, like things were kind of PTSD. When we got above 30,000, we transitioned into what I'm going to call the enthusiastic bull, not euphoric, but enthusiastic. 90% of the supply is now in profit. And when people are in profit, they start to take them. So we're going to get a bit more resistance and a bit more chop. CME futures overtook Binance since October. So that's telling you institutions have come into the game. Options are now as big as futures, sorry. So that's another institutional trend. And again, that happened in October. There's a whole bunch of metrics that say that the market kind of woke up when we broke through 30,000. So we've kind of crossed that barrier where it's now into the enthusiastic bull. People believe it now. There's not as much PTSD. Yeah. People believe we are now in a bull market. Now, talking about today's events, you can get down to fairly low level. With on-chain data, a lot of people just look at the macro side, and it's fantastic for that. Our data comes in on 10-minute, basically block by block, and 1 hour resolution. You can absolutely see these mechanics. And we released a report on Monday that basically showed that we call them short-term holders. They're like the hot ball of money that's following price around. They moved into the biggest profit they've seen all year, and they started taking them. So that doesn't mean that the top gets in. It just means that we meet some kind of resistance, right? That markets go up and down. They have to go down to go up, and they have to go up to go down. It's kind of this strange irony of price. But people start to take profits because they're in profit. So anyway, we can see those micro events. I'm not surprised that we had a bit of a pullback the other day. We're kind of getting to that exhausted state. The market has to re-find equilibrium. But that's kind of the short term. On the medium to long term, and this is, I think, the most exciting bit. When you look at the amount of what we call available supply, right? Whatever measure you want to do, exchange balances, coins that recently transacted, whatever measure you want to pick on coins that are likely to change hands, all-time lows. And that means that we're at an all-time high of long-term holder supply, hodled supply, whatever you want to classify it as, and however you want to measure it. And the rate at which coins are coming off the market is just so far in excess of the new coins being mined. So we've got a halving coming in April. We've got the ETF, which all things equal, the ETF is not going to reduce demand, right? It's probably going to be net positive for demand. And you've got the tightest supply we've ever seen, ETF demand flows coming, halving coming up. I mean, there's just a lot of things where it's like, how do you justify being a bear at this point in time? I just don't get it. So I think the medium to long term is looking really, really positive.
Yep. With the on-chain data, how do you know that it's an institution that's jumping in there when you go through
That's a great question. So with the on-chain data, it can be a bit more challenging. So you can do it by various heuristics like wallet sizes and things like that. You'll probably see if you follow me on Twitter, a lot of my commentary, you'll see I'm not a big fan of whale watching. A lot of people like to do it. It's a very popular sport. It's very inaccurate. Lots of people they look at block explorers and they say, oh look, this address has just bought 5,000 Bitcoin. It's like, okay, but that big address with 100,000 coins, is it a whale or is it an exchange? Because if it's a whale, yes, they bought 5,000 Bitcoin. If it's an exchange, someone just sold 5,000 Bitcoin. So everything is completely inverted. So the challenge is what you're basically saying there is that, oh, look, this whale is so dumb that they're reusing the same address over and over and over again for like 10 years. That looks like an exchange address, folks. It's probably not a whale. So when I come to institutional flows, I will generally look at because on-chain data is part of the picture. Why I mentioned futures and CME and Binance and options. This is like, as an analyst, you look at all the information. So to me, when I see CME overtaking Binance and options ripping up from being, they used to be like 10%, 20% of futures. Now they're bigger than. All of these are institutional instruments. So it's kind of a combination of lots of things. You look at big exchange flows. We start seeing like the average transaction size go from $5,000 to $50,000. It just shows that there's more big players moving in the space. So it's kind of a bit of a mix and match of things. But as any analyst, you're trying to look at the most probable reality with the information spread that's in front of you.
With the information that you do have in front of you, can you dive in and see what countries and stuff? So say since Javier Milei got elected president, can you see if there's more buyers in Argentina buying Bitcoin once he became president, or you can't get that nuanced with the data?
Yeah, so at some firms can. So chain analysis, for all the things that they probably are a bit unsavory for, what they do is get to that level of detail. So they've got, in fact, they do a report every year, which is actually very, very good on adoption of Bitcoin and crypto by and large. And it's actually a really good report because they do get down and they do quite an extensive job trying to profile different countries, looking at how stable coins are starting to move around as like a preferred medium of exchange. So that's really the avenue we go down there. When we're looking at stuff we do at Glassnode, we generally don't get down to that level of countries. We do have a couple of metrics which look at time zones, so like the American, the European, and the Asian time zones, because you can see when wallets are active and most trading. But they're fairly macro in scale. So certainly that's getting down to the chain analysis type world.
With the on-chain data, can you see how much, longs and shorts, how much leverage is in the system, or you only see that after they've been wiped out or flushed out?
So technically speaking, in the on-chain world, this is actually a great question. In the on-chain space, everybody's long because technically everybody owns it, right? You're looking at the supply that people hold. So you're only looking at owners. But you have to remember that when somebody sends a coin into an exchange, they're technically moving from an owner to a seller because they've changed hands. So when we look at on-chain data, and there's two components here, there's on and there's off-chain. So with the on-chain data, what we're looking at is people spending their coins. There's two buckets, people who are holding, people who are spending. And both of those have packets of information. You'll often see the HODL waves. That's like all the holders based on how long they've held. You can also look at the spending age bands. What is the age of coins? Are we seeing 1 year, 5 year, 2-year-old coins coming back to life? Now, each of those spent coins has a series of information we can assign to it. How much profit did they lock in? Because they bought it at 10,000, they sold it at 60, right? They acquired it at one point, they sent it to an exchange at another point. We consider that to be what we call realized profit or realized loss. And we can pull a whole lot of information out of that. So not so much the long short. We're looking at everybody who owns it, but we're looking at information about who owns it. And when they're spending, are they selling at a profit? Because when lots of people spend, think about this, at a bull market top, what would you want to see if you were looking for like real risky scenario? For me, I'd want to see lots of guys who have lots of conviction, aka they bought in the bear. They've held their coins for 3 years. They're up 500, 600, 800%, and they're selling and sending those coins to an exchange. So what happens is that happens, and it happens at a big scale. And you're basically looking for, show me when you and I, people who understand this market, are taking 10% of their chips off the table. Because at some point in time, they're selling to guys who are coming in because they saw Bitcoin in the news for the first time. You're selling from strong hands to weak hands, and you get this explosion of weak hands. That's the time to get out. And bear market bottoms are the exact opposite. The final piece of this puzzle on the long short is you've got futures. And in futures markets, you can see long, short, leverage, puts, calls, all these kind of things. So you kind of put both of those components together, two meaningful subsets of the market, and you look at how they speak to each other. And quite often they're very, very similar.
Yep. And what's happening right now today as we speak? Are more people holding it as Bitcoin in the hands of people that have been here for, say, 3, 5 or 7 years? Or are we seeing it starting to exchange and go into the new money or the dumb money?
We're pretty much at the highest level of hodling I've ever seen. And I mean, Bitcoin's up 150% this year, and the hodlers are just doing absolutely nothing. Absolutely nothing. They're just sitting there and waiting. So what I suspect is that now we've broken above 30,000. It'll probably get a bit choppy as we go into the ETF. And I mean, the halving has historically been a short-term sell the news event. The ETF, I would suspect the market prices a bunch of stuff in and then kind of panics, and the market's going to get volatile as all these events happen. But under the surface, people just aren't spending. So essentially, it's just this slowly diminishing pool of coins, just like bouncing around, trying to find a new owner. And when that influx of new demand comes in, I mean, it just looks really, really promising long term. Right now, we're seeing very, very little old coin spending. Historically speaking, and we've got a report on this on our portal, historically, long-term holders start to really spend and ramp up their distribution once we break to new all-time highs. So what'll be quite interesting, and here's a thesis, completely unproven, there's no evidence for it. To me, it feels like the market and the hodlers are a bit more hardcore now. I feel like the whole FTX thing and watching the washout last year and just the state of the fiat system, and also, probably most importantly, actually, the quality of Bitcoin education has expanded dramatically over the last 5-6 years. So I truly believe that the hodlers actually understand a lot more about this asset than they previously did. And there's a couple of different data points to that. But what I want to see, normally, if we get to 70,000, technically speaking, we should see long-term holders start to distribute. I actually want to see if they are going to say, no, fuck you. Give me a $30,000 premium. I'm not spending until $100K, right? Yeah. Because they're like, I need just an extra premium for the shit you put me through in 2022. I mean, this is my opinion, right? Like, I'm the only thing I'd really trade my Bitcoin for is something equally scarce, right? Property, something in that kind of vein. I'm just not willing to part with any of it at 70,000. Like, it's just not happening. I demand a higher price, and I have a suspicion that we might get a bit more lift off before they start spending this cycle. We'll see.
Interesting. Let's flip it up again. Going back to a tweet, 1st December, you tweeted, the on-chain analyst for Bitcoin is about to enter a bull market in China. What do you mean by that, and how do you gather that information if you're not going down to each country?
No, that was actually a joke. So it depends when you got into this cycle, but on-chain analysis went through what are you going to call it? Let's call it a maturation phase last cycle, where we had a bunch of charts, we had a bunch of people using those charts, and very, very, very few people, myself included, knew what the hell these charts did. So what ended up happening is that every chart was bullish. So I can't remember what the tweet is that I think it was something like China bans bad news, or analysts are no longer allowed to say negative things about the economy. So my joke there was basically saying that on-chain analysis is only bullish, right? And the context there is, it's actually a very inside joke now I think about it. I've spent the last 3 years, since 2021, trying to repair the reputation of on-chain data because I know it works. I've proven that it works, and my team's proven it works. The problem is that the market doesn't understand that, because they just say, oh, look, on-chain analysts just throw darts at the wall and say, look, it's bullish. But the truth is that there's both sides to the equation. So we've built our tools for managing a bear market, and we're heading into a bull market now. And there's no question the plan Bs of the world will emerge from the woodwork and have all their shitty analysis and all their just moon boy math. And there's no basis to it. It's statistically invalid. It's all dog shit. Nevertheless, we're going to head into this. And that was the joke, right? We actually do have tools for bad news on chain now. The fact is that no one was paying attention because no one pays attention in bear markets. So it was kind of that inside joke.
I definitely missed that one, but thank you for going into it. So I want to talk about, you said something that really intrigued me on another podcast, like in regards to Bitcoin proof of work, it leads to a higher state of consciousness. What's that mean to you? Obviously, you've got a solid foundation with your engineering background from first principles. How has Bitcoin changed the way that you see the world, that you think about life, how you interact with friends, family, the fiat world at large?
Yeah, that's a great question. It's something that I'm sure most Bitcoiners who kind of go down the rabbit hole in the proper sense encounter, which is that it just changes the way you think about stuff. I mean, again, I was a civil engineer. I knew nothing about finance. I'm entirely self-taught in this industry. I've got no financial training whatsoever. But I just found it so fascinating. And without Bitcoin as like that driving force of being like, hey, maybe the fiat system, that kind of ruler, that measurement, that system that you've lived in your whole life, maybe it doesn't actually make that much sense. So you can start actually like rethinking about, well, what does it actually mean? And you start asking interesting questions. You start understanding how the financial plumbing works. I mean, I know how bonds work now. I mean, why does an engineer know anything about how the bond market works? But it's fascinating.
Yeah.
So Bitcoin forces you to go down financial, goes down energy, it goes down computer science, it goes down all these different rabbit holes that I would say the vast majority of people, right? Whether you're a plumber or a doctor, have probably never thought about any of this shit before. And it forces you to go down there because it's intriguing. And what I find so fascinating about that is you learn a lot about the world. You learn a lot about yourself and your interaction with the world. And when you meet other Bitcoiners who've gone down that rabbit hole, there's like an immediate recognition that you've done a whole lot of work and you've kind of extended yourself beyond, what you've kind of trained in university or school or whatever to do. You've really gone down some, and it's a lonely road as well, because when you talk to your friends and family, they got no idea. I mean, good luck convincing them of any of it. So it's a very lonely journey as well, right? So I think that it's just I don't know, it's one of those things. It's just character building, right? And you find other people who've done that work, and I just think it's almost like a great filter, because generally speaking, most Bitcoiners I've met, I would go into business with. I can't say that with the vast majority of people that I meet.
Yeah. No, I agree with you there. And especially in regards to it being a lonely road. When you talk to another Bitcoiner, you feel so normal. And then when you're talking to someone else in the fiat world about Bitcoin, they look at you like you're crazy. And like, do you not understand the manipulation, the propaganda, the lies that are going on? You're talking about the fad or the distortion in whatever way. And then you go into fiat foods and everything like this. And do you think, this may be going a little bit off track, do you think people fundamentally know something is wrong? They don't realize Bitcoin is the solution, fix the money, fix the world. So they don't want to take their hands off their eyes, or they want to keep their head buried in the sand. Is it that, or they've just been so brainwashed that they believe the fiat lies?
Yeah, I mean, that's the thing, right? If I kind of compare myself, you go through school, you go through life, and I think Jeff Booth does a good job of explaining this, right? You can't actually tell that you're inside the matrix until you kind of realize that you might be plugged in. And how can you expect people to go against what they've always believed? So in that regard, I mean, the system and the incentives have been set up in such a way that people don't observe it. I mean, I don't know what it was like for you, but I certainly didn't get taught about bonds, or I mean, even my own taxes, like in school. They don't teach you about how to like manage your own finances. Now, is that deliberately omitted, or is that just a product of the system? It's hard to tell. But what I do know is that when you go down this rabbit hole, things start to make sense. The unfortunate part about it, and I talk about this with a lot of people, once you've kind of seen the mechanics of how the machine actually works, it's tricky because you can't unsee it. It's not like it's a one-way trip, which is good for the adoption path of Bitcoin, because it's hard to become a Bitcoiner and then walk away from it, because it's just like it makes too much sense. But simultaneously, once you kind of see that the world's a bit of a scam, it's hard to not see the scam, and it does. It frustrates. I'm sure you've experienced. It frustrates the shit out of you. So that's a bit of a trade-off to the journey.
Yep. I read through your Twitter a lot. I use a lot of your tweets and the live news videos and stuff. You do a lot of shit talking, to say it politely, against the bears. One of the greatest tweets is in regards to the crop of Bitcoin critics this season really are impressively below average. Just a hopeless mix of salty TradeFi analysts who'd understand Sharp ratios, politicians and bankers who claim crime never had a market before corn, comedians who think they found the ultimate gotchas, instead demonstrate how they've never made $1 in markets, Tether, truthers who are stuck in first order thinking and can't see the CBDC in front of their eyes. Gets worse. Bitcoin bishops who condemn one UTXO versus another because it doesn't align with their holy doctrine. It's a tough time for the Bitcoin bears if they are sending their best. That's not even the half of it. You carry on with.
It's actually a good tweet. Now you've read it out. I'm not mad about it.
That's a fantastic tweet, man. I loved it, and it put a smile on my face. What do you think about people that are bearish against Bitcoin? Do we just have it too good in first world countries, and we need something catastrophic to happen before people wake up, or they're just using it to be able to engagement farm, basically, or they're just dumb and hopeless?
Yeah, I mean, and that's what I tried to touch on, right? It's kind of a bit of all of the above, and I'll try and go top to bottom because I think it is a good list, and it kind of captures, I think, the bulk of the Bitcoin critics. The TradFi guys, what I love about it is, some of the work the guys at Swan have done. They've just shown that in any portfolio, Galaxy Digital did the same, and they did some great research where they basically say if you have 0 Bitcoin and you go from 0 to any allocation whatsoever, your risk-adjusted returns improve. So at some point in time, these TradFi analysts are going to just have to face the fact that they can't do basic financial allocation calculations because you're just objectively wrong, right? So at some point, the salt mine can't continue. You might have to remind me what the second one is. Maybe we can go down them one at a time because I think they've all got really interesting points associated with them.
No, you sort of really tear everyone apart with it. So salty trade analysts, politicians and bankers who claim crime never had a market before corn.
I mean, this is great, isn't it? I mean, cash is the default maneuver because, I mean, for financial crime, I'd love to just imprint it on an immutable record forever that nobody can undo. What a stupid decision that is. So, at the end of the day, Bitcoin is just not a good asset for crime. And you've seen these comments from, the Elizabeth Warrens and the Jamie Dimons, and it's like, I mean, it really feels like they're clutching at straws at this point. They're just running out of ammunition, and it shows.
Yeah. What do you think just in regards to Jamie Dimon? Are they stacking behind the scenes or are they going to go into BlackRock's ETF with cash? Like, they can't not have any exposure. It just doesn't make any sense. And he has offered it to his high net worth individuals in the past. And their crypto side of things is really building out. They're growing that. What are your thoughts? And I know it's a lot of speculation until it happens, till it's made public.
Yeah, it's hard to tell. I mean, certainly, look, my view is that I'd be very surprised if these big banks truly, they're not allocating billions of dollars, right? What I suspect is because otherwise the price would be $1 trillion, right? It just the price would just moon if they were actually putting any kind of meaningful capital in. So my general view is that what's going to happen is that their clients are demanding these things. They're getting requests from their high net worth individuals that they want to have these allocations. They're building out these products because the market demands it. They will eventually have to buy on behalf of their clients. And it's just this slow but sure march towards you're lost, right? Because at some point in time, they can't keep ignoring it because what's going to happen is their competitor will do it and then their clients will move. So at some point, the fact that people want Bitcoin is going to just force their hand, which is a beautiful irony.
Love it. Moving on to comedians who think they've found the ultimate gotchas and instead demonstrate how little they know or they've never made $1 in the markets.
Yeah, so this is, I can't remember his name, but what's his name? Something Owens, but
Benjamin Owens, wasn't
watching him attempt. That's the bloke. Yeah, I mean, I don't even follow him, and he's on my timeline for bloody half the day. It's just like, mate, stick to comedy. Just truly, just stick to comedy. You're just wrong. It's just embarrassing.
And Tether truthers, this one's pretty nasty, really. Who are stuck in first order thinking and can't see the CBD in front of their eyes. What do you say to people holding Tether and speaking that truth?
Yeah. So this is I think Tether is one of the most fascinating game theoretical things happening in the markets at this point in time. So this one's actually and when I say first order thinking, if you go to the next layer, right? So I actually put out another tweet on this. The concept, at least the way that I see it, you do not own $90 billion of treasury, more than Australia, more than like most G20 countries. You do not become the second or 22nd largest owner of treasuries in the world without a couple of meetings with the US government, right? So essentially, my argument is if they can freeze Russia's reserves, there is no chance that they can't find Tethers. So they know where Tether is, and they have to. They have to have had conversations with them, right? US government and Tether. So as a result, the US government, if we just think about this from a game theoretical perspective, the US government is on the bones of their ass broke, but they can print the bonds. So they can fund themselves as long as there's buyers for bonds. Now, we're in an era where foreign nationals are buying less. The pension system is stuffed to the eyeballs. There's just not that many buyers left. And then in walks Tether as a market accepted US dollar in every part of the world. It's dollarizing Argentina. It's dollarizing Turkey. It's going to decimate every third world currency ever. It's strengthening the US dollar. And what's actually happening here? If you're an Argentinian, for example, it's much better for you to hold the dollar than the peso. So it's actually that's a win for you because relatively speaking, you've gone from a hyperinflating peso to a less inflating dollar. For the American taxpayer, they've essentially found a new buyer for the bonds to fund their boomers' retirements and their medical expenses and their social programs at a time when nobody else wants to fund it. When you look at this whole system, Tether is an infinite bid to dollarize the developing world and fund American largesse. It's just the most beautiful system ever. And at the same time, it's like, why haven't they shut them down yet? Because they've worked this out. So in my view, and again, it's speculation, but to me, Tether has been blessed as the CBDC. And the beautiful thing about it, if the US government rolled out their own CBDC, I think they would struggle to get people to adopt it because people would see all the Orwellian shit that comes along with it. The market chose Tether. Just let it, like it's got the network effect. Let it go, do its thing. So whether the top dogs in the treasury understand this, I don't know. But absolutely for sure, when I look at it, it's like the game theoretical side of it. To me, it just makes a whole lot of sense.
It's pretty crazy. A little bit of food for thought. Miners, we've seen their hash rate reach all-time high several times this year. What are you seeing at the moment? Are they still at an all-time high? Is there more hash rate or less? And are they in profit or loss? And are they selling their coins or are they holding on to those freshly minted coins coming into the halving?
Yeah, so historic, so hash rate is at all-time highs and continues to push, which is just truly incredible. Part of this is going to be new rigs coming online. Part of it is just new generation machines because for the same cost in terms of machine space, you can get more hash rate. Revenues. So we've got a couple of models where we try to estimate the average all-in sustaining cost for miners. It's somewhere to our best estimate for the average guy, somewhere around 24,000. Which means that miners, if price is now at 44 or 43 or whatever, once we get up into the high 40s, I think we're getting into the point where miners won't be as stressed as they previously were. Prior to that, miners were absolutely very stressed. And if we had have halved and we were below 30K, we would see a mass mining capitulation. So they are on the edge of profitability. Now, that said, we've also got the uptick in fees, right? We've had a sustained fee market more or less for the entire year. Which has been very, very meaningful. We're talking about, I can't actually remember the numbers, but it's something on the order of like double-digit percentages, 10, 20% of the block reward is now being paid in fees. And once we halve, I think it's like 1 point something Bitcoin in fees. You go down to 3.25 or 3.125. Now you're talking about a pretty meaningful amount, like 30%, 40% is coming from fees. So in that instance, we've actually got a much more sustainable market than we would have had otherwise. But yeah, miners, it's a cutthroat business. And to answer your final question there, by default, if you're looking at miners, assume that they sell everything because most of them do. And most of the miners who do not sell everything don't make it very long. So hodling coins as a miner, I'm of the view that if you're a miner, same as gold miners, they don't hold on to the gold. They mine the gold. They arbitrage the proof of work cost, which is energy or mining costs, versus the spot price. Your job is to manage your energy and your cash flow for your business. The miners should not be in the business of hodling, in my opinion. And history has shown that those that try to hodl get minced.
And what cohort is buying that freshly mined supply, the freshly minted supply from the miners?
Yeah, great question. So the answer is everybody, but there's different ways we can measure it, right? So I think issuance is a really easy one for people to understand because it's like an obvious baseline, right? New coins coming in. If you look at all of the shrimp, right? And when we say shrimp, people with less than one Bitcoin, Essentially, people who on chain have less than one BTC, and this can also be like, let's say, for example, right, you're a lucky bugger, and every month you're doing a 1 Bitcoin DCA, just ballpark. You would every single month you would count as a new shrimp, right? So
Okay. Yeah.
we're kind of counting. Yeah, it's not just cumulative. Nevertheless, if you look at just the shrimp, they're absorbing like 70% of all the coins that are being mined. So just the average punter out there is taking up 70% of the coins that are mined. You add on there the next cohort with people who are buying 1 to 10, these high net worth individuals, you're just taking up all of the issuance. So essentially, coins are just getting sucked out of exchanges into people's wallets, and they're just sitting there. So who is actually buying it is much harder to tell, but on a relative basis, the shrimp are doing a hell of a lot of the heavy lifting as it is.
Yeah, I guess a good message for everyone out there is keep stacking, chilling. One question that I really love, I don't know if you're a reader, but do you have any books that you'd recommend that people should read? It can be related to Bitcoin or not, maybe in relation to mindset or not. It's the floor is yours.
No, great question. One of my favorite books, particularly around markets, is Reminiscences of a Stock Operator. If you haven't read that book, I strongly, strongly recommend it, because essentially it's Jesse Livermore, who is the kind of the greatest trader of all time. One of these blokes who, he boomed and bust throughout the Great Depression. The poor bugger ended up killing himself because he just went through so many ups, downs, and made fortunes, lost fortunes.
Yeah.
But he tells this story. It's a fictional character, but it's still him writing it. So what it really tells you is the psychology of you as a trader or an investor and the market. And all of the anecdotes that he talks about. I mean, I use the anecdotes that he talks about in my on-chain analysis because I'm looking for those points of capitulation, points of greed, points of fear, all of this stuff he describes. And I've read a couple of other different trading, like mindset books over the years, Trading in the Zone and the like. And all of them are just a derivative of the great story.
Yeah.
And the cool thing is it's not like here's a self-help book. It's just like, it's a narrative. It's a story as well.
Cool.
So he tells this narrative that captures the human brain as we respond to markets. And that has always been true. It always will be true. So this is a 100-year-old book that tells you how markets work. And it's just fantastic.
I'll definitely be downloading that this afternoon when we hop off this call.
Yeah,
Looking for a new book.
It's a great story, mate. It really is. And he tells it in such a way that like you're kind of in the moment with him. You're sitting on his shoulder, just watching him go through this thing. It's great.
So you go by Checkmate or Checkmatey on Twitter. I'll put that link below, as well as glassnode. You don't only just shit post, you put out a lot of charts, a lot of the on-chain, you break that down. Glassnode also has a YouTube channel, which is absolutely fantastic, very high level as well. So I'll put that all there for everyone to be able to see. But what message would you like to depart with the audience? We are coming into the halving. The BlackRock ETF is looking fairly certain. You do say there's going to be a little bit of chop.
Yeah, I think there's two things. One, bull markets can get pretty wild, right? So when you may have a plan today and you're like, oh, I'm going to sell at 250K, I'm going to sell at 100K. When you get to 100K, actually executing on that is a whole different animal. So in many ways, have your plan and seriously write it down. Put it on a piece of paper, write it down and stick to it. Because when you write it down today with a clear mind, you're actually thinking about yourself in the heat of the bull market. You won't be able to, and it'll all blow up and crash, and you won't be ready for it. Now, the final piece to that is on-chain data is perfect for the hodler. And what a lot of the work that I do is trying to find what we call confluence. I want to see, for example, what does a bull market top look like? Well, miners are making too much money, right? Investors are in massive amounts of profit. They're also taking shitloads of profit. Lots of old coins are coming back to the market. And by and large, the supply is dominated by the guy who, like, brand new buyers, people who heard about Bitcoin in the news at 250K. All of these things can line up and give you a very, very confident, like, it's too hot. It's probably overheated, and very, very simple statistics. You don't need any kind of complex stuff. And again, a lot of the work we do is building charts that will turn red when these things are hit. It's then up to you to go, does that stick with my plan? Excellent. So keep it really simple. On-chain tools are perfect for the hodler. You don't need to understand a lot of them. Just start that journey and you go through those initial steps, because if you learn 5, 6, 7 metrics, you're probably good to go.
Absolutely awesome. James, can't wait to have you back on. I'll put all your links below. Thank you, everyone, for watching. Watch the next video. Be blessed. Peace.
Thanks, mate.